Hello, everybody. Welcome to this webinar that is titled How to Use Algorithmic Strategies to Up Your Trading Game. So welcome to this webinar brought to you by Bursa Malaysia Derivative and managed by our company LifeChamp. My name is Shen Chu. I'm the moderator for this session. And today, the webinar content is a bit more advanced, and our speakers have, clocked in many hours to produce this content for all of you today. So I also can't wait to learn from David about how do we use algorithmic strategies, okay, to improve our trading. All right, so that is the essence of this webinar today. So before we begin, as usual, a little disclaimer is that whatever we share in this session is only for educational purpose. So in no way that we give you any recommendation for you to buy or sell any listed securities or derivatives that we mentioned here. So if you decide to make any trading decisions, you're 100% responsible for all your investment risks. Now, it gives me great pleasure to introduce our speaker today. And he is currently a full-time trader and managing partner of Xmodeus Trading Group PLT, a consultancy firm specializing in providing bespoke trading strategies and coaching for private and corporate clients in the equity and commodity derivative markets. He has 24 years of experience in the Malaysian listed derivatives industry, having held leadership positions in futures broking divisions of major investment banks in Malaysia. He is also the past president of the Malaysian Futures Brokers Association from 2018 to 2019. Now, since the year 2000, he has spoken in hundreds of seminars and workshops to over 4,000 retail traders on trading Bursa Malaysia derivatives, as well as foreign futures market. So this includes live market trading sessions and webinars. He has also been a trainer of licensed brokers for the continuing professional education program courses of the Securities Industry Development Corporation, SIDC. And he has been an invited panel speaker at international palm oil industry events such as POC 2019 and also POTS India 2019. And he is none other than Mr. David Loh. So David, good to see you here today.
Pleasure, Shane.
Yes. So yeah, without further ado, let me hand over the session to you.
Okay, thank you, Shane, for that wonderful and long introduction. Okay, good evening to everyone. Hope everybody's keeping well. Okay, tonight we have a very interesting topic. Actually, this topic was supposed to be done towards the end of the year, but it looks like a lot of people want to learn how to use algorithmic strategies for their trading. Okay, especially the younger crowd who's more computer savvy. They want to say, "Hey, how do I use this? Can I up my trading game? Can I improve my results using algorithm?" Okay, so tonight we will answer this question. Okay, and for those of you who are also experienced traders, okay, tonight is also what do you call that? An opportunity to gauge whether algo strategies, what do you call that, is good or suitable for you. Okay, but interestingly, I make one statement here. Okay, before we even go. Okay, it sounds a bit like a bit drastic, this statement, but what I'm going to say is everybody should be an algo trader. Okay, so we start from there and let's see why everybody should be an algo trader. All right, so I hope you're seeing my screen now. Okay, if you're looking at my screen, we are ready to go.
Your screen is not put up yet.
Oh, not put up yet. Good, thank you for that. Okay, let me see. Only I see my own screen.
Yeah.
All right, so
you need to share
my screen. Let me share it. It should be right in front
perfect.
of you now.
Now
okay, fantastic. So we are good to go, and let's move on. Okay, this disclaimer is the same as what you saw from Shane's slide, so we'll pass this. Okay, so this is what we are going to cover, okay, tonight, okay? Learn how to leverage the power of algos to improve your trading, okay? So what you will take back to you tonight is you will have a look at the different algo strategies, okay? And understand why I say and emphasize that everybody should employ an algo, okay? There are a lot of misconceptions about algorithmic trading, okay? So when you bring that word out, algo trading, a lot of people tend to think that, wow, algo trading, this must be extremely complicated, extremely difficult to do. You know, how can I compete with all those guys out there with the super powerful computers, high frequency trading, okay? So a lot of people get put off, okay? So that's why when I say everybody should be an algo trader, some of you may be taken aback, okay? But let me explain to you why it is very important to employ algorithmic strategies for everyone. Okay, so let's move on to that. So we'll learn how to leverage that power algo, okay, to improve trading. Three critical things to know before you begin, okay, algo trading, what you need to have, okay, what skills you have, what things you need to know even about yourself before you start getting into that journey, okay? Then evaluate what sort of algo strategies are suitable for your trading, okay? So you have to, we will go through the process of finding out what is suitable for you, okay? And then we will go through the step-by-step, okay, from strategy creation to the execution of your algo, okay? Those 6 steps that will take you from the start of building an algorithmic strategy, okay? So that's what we're gonna do, right? So move on to it, okay? But the first thing I want to cover, okay, the world of algo, okay? If you have been reading about algorithms in the headlines and all that, you know, you will come through terms like quants, machine learning, robot trading. Hey, maybe some of you have tried robot trading as well, right? So if you have tried other markets like in the FX markets or even CFDs, these are quite, what do you call it, quite popular, especially if you venture to try things like on the MetaTrader platform, right? So robot trading has been quite a long time been a feature of that, okay? So some of you maybe even have tried that before, okay? So robot trading, machine learning, co-location, all these big things you see on this page, okay? Things can get quite confusing, okay? Now, some of these strategies employed by algo trading, hedge funds and all that may not be something that you can even do or even want to consider because you don't have the resources to do the things, what do you call that, that these strategies require, right? Things like, you know, you need to have a co-location, basically, you need to have your servers in the exchange and all that. That's probably something that you won't be able to do or don't have the resources to do, right? So those strategies we will differentiate later and see what strategies can an individual trader use, okay? And what strategies are basically for the institutional and for the big guys to use, right? So we'll do that so that we can cut out what is confusing about algo trading. All right. So before we get into the algo trading strategy, let's go back to the very basic building blocks of what a trading strategy is. Okay. So basically, a lot of you may have seen these slides if you have followed some of my sessions. Okay. Basically, in terms of a trading strategy, there are 3 key ingredients. The first is, of course, methodology. Right? How what methods do you use to enter the market, exit the markets? How do you call a trade? Okay, how do you trigger a trade? Those are methodology. Right, and then you have the second part, which is money management. That's where you do position sizing, you do your risk sizing, exposure, how much do you trade or how much do you expose per trade, you do your risk management, all that under money management. And of course, lastly, trading psychology, which those who have followed trading psychology is a very big part of a trading strategy. Okay, now we want to see how algo trading can actually encompass all these 3 things inside. What are the advantages when you employ an algo? Okay, how does it give you a quick startup or advantage when you use algo in these 3 spheres or 3 ingredients of a trading strategy, right? So before we get into a trading strategy, I want to talk about the why. Okay, why do you want to consider algo trading. All right. And I want to go in and talk about these few things. Okay. Let's analyze why 90% of traders actually lose money. Okay. By knowing why traders lose money, then when you look at the strategies that algo can give you, then you realize that, hey, yeah, algo trading is something really powerful. Okay. So these are, in these next 2 pages, you see the main reasons why traders lose money. Okay. The first, of course, is not knowing the difference between long-term investing and trading. Okay. So trading, short-term trading or shorter-term trading has a very different implications and techniques compared to long-term investing. Okay. So if you are trading, you must use techniques that's suitable for trading, and for long-term investing is a different way of taking risks. All right. Number 2, underestimating the risk and the leverage. Okay, so this is something that in futures trading, okay, because the futures trading is a leverage instrument. If you don't understand the risk and the leverage, okay, then you will get into problem. Okay, so this is a question more of which ingredient of the trading strategy. This is more on money management. Okay. Deception that trading looks so simple. Okay, this matter of knowledge. People think that trading so simple. Okay, some of those people who started trading and make money in the first initial stages think that trading, wow, so simple only, But the trading actually takes a lot. Okay, and when you go in and actually look at how you set up a trading strategy in terms of algo, you realize that a lot of things are needed in order to be successful in trading. Okay, so this deception that trading is so simple it remains a deception. Okay, you can be deceived that the trading is actually so simple. Okay, it can be simple. Okay, but it depends on how you do it. All right. The other thing, no trading through no training before trading. Okay, this is a matter of knowledge as well. Okay, starting off undercapitalized, not enough capital. Okay, this is something that is very important as well. Okay, because capital will depend on what types of trading instruments you use, what types of futures contracts to use in your trading strategy. Okay, and in terms of money management, capitalization is a very, very important part of it as well. Okay, using money that isn't truly risk capital is another reason. Okay, this is where you can have a strategy, but you cannot afford to lose money, right? So in that sense, okay, you'll be this is one of those serious things in terms of your trading psychology, because you cannot afford to lose. Okay, this is not your risk capital. Overconfidence is a beginner's mistake. Okay, wanting to be right instead of making money. So this is an ego problem. So this is a trading psychology issue, right? Listening to other people's opinion, OPO, okay, to trade, using news, using rumors, using social media. Okay, so this is an issue of trading methodology. Okay, whether your trading methodology is sound or not. Okay, trading for excitement is a trading psychology issue. Okay, so whether you have a good strategy or you're just basically fooling around. Okay, so if you're trading for excitement, well, I think the only guys that are going to get excited in the end is those that take your money, right? So next, what other things, what are reasons why people lose money? Okay, lack of money management. Okay, this is very important as well. Lack of methodology. Okay, so this is something that if you go into the algo strategy, that will help you tremendously in terms of methodology. Having trading rules that can't follow. Okay, this is one of those things that an algo strategy can help you with as well. Okay, if you have trading rules that you can't follow, you don't have the discipline. Okay, having unrealistic expectations for trading returns. Okay, this is something that maybe in terms of they coming into the business of trading, they don't understand the risk rewards of trading. Okay, so some people may be caught, or maybe some people told them that oversold the benefits of trading. Okay, without telling them the risk. Okay, over trading both in size and frequency. This is a matter of money management and position sizing. Okay, no discipline, no patience. Okay, maybe algo trading can help you out with this. Okay, seeing trading as a hobby and not as a business. Okay, when you go into algo trading, you will realize that okay, you really need to plan it out properly. So you will basically force you to trade seriously. Okay, trading without a plan. Okay, algo strategies to definitely help you out with that. Okay, trading hunches, we will address this. I feel, okay, you basically trade with your emotions, right? So this is something that algo trading strategies can also help you with. Okay, so in terms of looking at all these 20 reasons, there are many of these areas that algorithmic trading can help you. Okay, so we'll dive in and see how we can employ that to improve your trading. Okay, so when we talk about trading algos, we first talk about two different types of trading approaches, okay, in terms of the methodology, okay. The first is discretionary. We want to contrast between what is discretionary trading versus systematic trading, okay. So basically in terms of trading, there are these two main approaches, okay. So in terms of what these two trading approaches is, okay, let's consider discretionary approach. What is discretionary approach? Basically, when you're using a discretionary approach, and a lot of people actually use this method, okay, you basically enter and exit trade based on feel, okay. Now, what do you mean by feel? Okay, so you look at a chart, okay, so maybe you learn about charting and technical analysis, then you look at the chart pattern, okay, maybe you look at patterns, and then you see, you spot a pattern, okay. So perhaps this pattern is a bullish pattern, okay. So you decide to buy, okay. Or you read news, okay. You read some news that may be bullish or bearish to some of the futures contract you trade. Maybe it's palm oil, maybe it's the Malaysian index, okay. So you read this news that you, wow, this is really bearish for the index, okay. So I feel like I'm going to short the market, okay. I'm going to short the FKLI. Or you research fundamentals, okay. You may be trading stocks, or you may trade indexes, or you may be looking at palm oil data and say, you look at the fundamentals, hey, this one looks very bullish, and then you feel that, okay, I'm going to buy FCPO, okay. Or maybe you use hot tips or rumors or hunches and all that. So if you're employing this kinds of strategy, okay, you will hear in your head, okay, in your head, you will hear this thing, oh, I feel can go in already. I feel, yes, I feel I want to buy. Okay. So when you hear this thing, I feel, okay, basically what you are doing is basically these decisions to get in and out of the market is made by you, the trader. Okay, so you say, hey, David, of course, all the trades are made, the decision is made by me, right? Okay, so let me contrast it later after with what is systematic trading. Then you understand what does that mean, okay? So in terms of discretionary trading, basically you look at something, you observe something, whether it's technical analysis or news or some research report, and then you decide, the trader, decide to go in. All right, so that's a discretionary approach. Now, in terms of looking at at the systematic or mechanical approach, this is rule-based, okay? So you enter the market based on rules, okay? So looking at the rules that you employ, okay? If the rules say are triggered, the conditions for your rules to buy are triggered, then you will go in. Or conditions for taking profit comes in terms of those rules that you have for your trading, then you will exit, okay? So it is a very structured, very disciplined, and a very non-emotional method of trading, okay? And this decision actually are made by the methodology, okay? So the different contrast between discretionary approach and systematic or mechanical approach is who makes the decision, you or the method. Okay, so this is very important. So in terms of looking at algo trading, okay, guess which method it is going to employ, right? So it's very, very obvious that you will have to employ the second method, which is the systematic or mechanical approach, a rule-based entry and exits, okay? So let's define what is an algo, okay? We go into what is an algorithm, and we go to the Oxford English Dictionary to define what an algorithm is, okay? So an algorithm is a process or a set of rules to be followed, okay? So can you see the common denominator now with mechanical approach, okay? A process or a set of rules to be followed in calculations or other problem-solving operations, okay? So in terms of a calculation, or maybe calculation, your entry or exit, what problem you want to solve, basically you want to trade the market, okay? So using these rules, you're able to enter, exit the markets, all right? So, and the last bullet point is especially by a computer, okay? Okay, especially by a computer, but not necessarily by a computer. Okay, please remember this distinction. Okay, algorithms or algo trading, okay, basically is a process and set of rules to be followed. Okay, and this set of rules, okay, can be employed and can be what they call that executed by a computer, but not necessarily by a computer. Okay, that's why now you will understand that if when you employ an algorithm in your trading, okay, basically you're approaching it in a very system and methodical way. Okay, but then if you go through the process of running through the whole process of turning your algo or turning your trading idea into a live algo trading of that process, if you go through that process, you will see that even going through that process will what I call that help you in your trading even now. Okay, so let's go on and see how that works. Okay, so let's contrast between algo versus discretionary. Yeah? This is going to be very similar with the one you saw contrasting within the systematic trading and methodical. Okay, so in terms of discretionary, is feel. Okay, so it's subject to emotions. Okay, and you have this very important thing, this limited ability to backtest. You basically, when you use discretionary trading, you don't really get a feel of how successful your system can be. Okay, and we'll talk about backtests, which is a very important feature of designing an algo, is the backtest. Okay, so backtest tells you what? Backtest basically you go to historical data and see whether your system actually works in terms of historical data. Right, and that's one of the key components in terms of designing algos and implementing an algo strategy. It's the backtest, right? So in terms of discretionary trading, you have of course constraints in time now, because it requires you to be making those decisions as a trader, right? Your ability to watch markets, to watch news, okay, to read enough research reports is all has this constraint in terms of coming to discretionary trading. Okay, and of course in terms of discretionary trading, you have to manual order execution. Now, in terms of algorithmic trading, right, these are systematic rules, okay, which are basically fully mechanical, right? When you program actually a program to run, a computer to run your algorithm, it has to have systematic rules. If not, it cannot run. Okay, garbage in, garbage out, right? So there's no emotions involved. This one of the most powerful feature of algo trading is it basically removes a large percentage, not everything. Okay, some people can still switch off the algo. A large percentage of the emotional what they call that part of trading is automated. So in a sense, it helps you with like a triggering order. Once it comes in, you do, the computer will do it already. You don't ask yourself whether you should do it or not, right? So in terms of that, it helps a lot in terms of trading. Okay, ability to backtest strategy is very, very important. Okay, when you backtest a strategy, you know the performance of what the rules that you're trading. Okay, a lot of people trade blind. Okay, trade blind. What do I mean by trade blind? Because they don't really know whether the system they are trading. Okay, and I used to do that as well. You know, I looks like the system works. Okay, but you don't really know until you backtest. Right now, of course, historical backtesting is not foolproof. Okay, but at least it gives you some sort of a confidence. Okay, that based on the past data, okay, these particular rules or this particular method actually works. Okay, so in terms of algo trading, you must basically backtest it. Okay, yeah, in order to implement it. Okay, this is one of the abilities in terms of algo trading that's very, very powerful. Okay, so if you employ and automate your algorithm, of course the program can watch the markets 24/7. Okay, of course not 24/7, markets are open 7 days a week, but then almost round the clock you can see the power of the algo trader, okay, or the algorithm, because it's automated. If you automate it, okay, although I said that you don't really need to employ algos that are automated, you may choose that as an option. Okay, when you do that, of course, it's a very powerful feature. Okay, if you trade multi-markets, okay, if you trade markets that during the time when you are in bed, okay, so those are basically you can maximize the opportunities that the markets actually give you. Okay, so the execution can actually be automated by computer compared to discretionary trading. You are a manual order execution. Okay, so those are the good stuff in terms of the algo trading compared to discretionary trading. All right. Okay, please, of course, we have a Q&A at the end. Please put in your questions later in the chat box or in the Q&A box and we'll take it over there. Okay, I want to talk to you about this turtle trading system. Okay, some of you who have been trading for a long time will have heard of the turtle trading. What's the turtle trading? Okay, turtle trading is basically a very legendary algorithm of the 1980s. Okay, now in the 1980s, okay, these two very good traders, Richard Dennis and William Eckert. Okay, these guys are legend already on Wall Street. Okay, basically they turned $5,000 into almost 100 million with their system. Okay, and this turtle system is a trend following system. Okay, and how did they become so famous is because in the 83. Okay, they it's basically a bet, actually a bet between Richard Dennis and William Eckert, basically saying that Richard was saying that he could actually train people to be as successful as him, you know, and William Eckert said, no, William said that everybody is born, either it's a born trader or it's not born trader. Okay, so they made a bet, they put an advertisement in the Wall Street Journal, and then they employed, of course, they filter, they employed, they interviewed people, and they basically employed about 10 plus traders that they will teach them for 2 weeks on the turtle trading system. Okay, the system that actually they made so much money on. Okay, this basically started as bet, but the turtle traders became legends. Okay, because those people who learn, okay, not every one of them become successful. Okay, but a lot of them became very successful money managers, and they make millions and millions of what do you call that of US dollars. And became such a legend. Okay, so they traded things like futures markets like bonds, commodities, and currencies. Okay, and what is this turtle trading algorithm? Okay, you'll be very shocked actually at the simplicity of this algorithm. Okay, although I don't have it over here, you can always read it online. Okay, basically the turtle trading system, okay, is a system which basically buys the market when it exceeds the 20-day high. Okay, and then takes profit at the 10-day low. Okay, or sells a market at the breakout of a 20-day low and then gets out at a 10-day high. Okay, so that is the algo. Okay, of course they also have the algo for money management, how much exposure to put. Okay, but this algorithm is not a automated algorithm. Okay, it's traded using human, which is the human turtles. Okay, which they employed. Okay, including Richard and William themselves. Okay, and of course back tested manually with pen and paper. Okay, now the question is whether these particular rules, okay, which you can find on the internet itself, okay, what rules will work today. Okay, so there's contention. You may want to take that to backtest. Okay, I've seen some backtests on this system. Okay, the fact is this system already from 1983. Now it's some many years already, right? Some 40 years already. Of course, they are already, probably the rules have improved. People have improved on those rules. Okay, but taking those initial rules and putting it into place and changing some parameters, you may get actually a very successful system as well. Okay, but one thing I want to tell you about this story of the turtle trading system is this: how those 10 over people that were very successful, they have one very special guy inside. Okay, one of these disciples. Okay, his name is Curtis Faith. Okay, if you want to read the story of Curtis Faith, you can go in and look out for this book called The Way of the Turtle. Okay, so Curtis Faith wrote this book, and Curtis Faith, during time in 1983, his background was actually a system trading tester. Okay, basically he tests trading system. Okay, last time they were using, of course, very rudimentary personal computers to test, right? But he had this trade, and William and Richard Dennis basically employ him because they saw in him this potential. Okay, guy that actually systematically tests trading system. Okay, so read about that and why Curtis Faith became one of the best traders of all in terms of the group that the turtle traders were formed. Of all the legendary traders, Curtis Faith was one of the best. Okay, and interestingly, he was one of the guys that actually employed backtesting, and he was a backtester actually during the times in the early 1980s. Okay, so check out that story. Okay, so in terms of algorithm, okay, even basically you're looking at basically at a mechanical and a rule-based system, right? So it's something that you can actually employ in your trading now. So if you don't have that feature in your trading, okay, look towards how you can put this into your trading system, or how you can actually make your system a rule-based and methodical way of trading. All right, so let's move on. Okay, so let's talk about the algo strategies that you can use as an individual trader, and what are the things that you probably won't touch. Okay, so in terms of looking at institutional trading firms and hedge funds, in my experience, in my work previously, we onboarded all these guys for Malaysian market, right? They are large, high frequency traders. They could be proprietary traders. They could be big family offices, or they can even be individual trading, employing algos into the market. So we have onboarded all these guys into the Malaysian market as well. And these guys have different types of strategies. Okay, you may have strategies that employ between multi-market and multi-asset strategies. Okay, they have things like high frequency trading, things like statistical arbitrage. Some of them are market making and all that. Okay, some of them are event arbitrage trading. Okay, in the US, of course, things like dark pools are part of the algo strategies. Okay, then we have VWAP, TWAP, iceberg. These are basically order filling algos. Okay, they are able to fill algos. So all these types of strategies, of course, not something that an individual trader like yourself will employ. Okay, so in terms of individual traders, okay, basically when you employ algo, you employ the algo to do systematic trading. Okay, it could be market timing. Okay, we could be trend following. It could be a counter trend. It could be a pattern trading. It could be spread trading, right? So in terms of individuals, the types of system that they use, okay, is normally not the kind of the high frequency trading where you need a lot of infrastructure, millions and millions of dollars worth of infrastructure to implement those strategies which you see on top. Okay, this may not be the space that you may want to, but some of you, if you want to find a career in this top box, of course you could. Okay, I'm not saying that you can't be using. Okay, but in terms of using it for your individual trading, okay, you as an individual or retail trader, okay, these strategies below are more likely to be what you'll be using. All right, so let's differentiate that so that you don't confuse between all those high sounding power names or terms that you might find confusing. All right, so in terms of individual and retail traders, you want to, most of the time, the strategy we use will be about market timing. Okay, whether in the trend following system, breakouts and all that, or in counter trend, in pattern spreads, or in range trading. All right, so this is to differentiate between the algo strategies that individual traders will be using. Okay, so what skills do you need to get you started? Okay, so of course, the first thing is in order to do algo trading, you need to have a bit of, you can't be a total beginner. Okay, well, you can of course start your trading experience from these slides, okay, and gain those experience. But to quick start, of course, you need to have been trading for a while. You know the trading skills and experience that's required. Okay, you know how to some sort read the markets, what type of orders, okay, some idea of what risk management is, position sizing, etc. Okay, you have these basic trading skills and experience, that will be a very good start. Okay, because everything you want to do has to start from the experience of trading, right? So if you don't even know what's a market order, what's a limit order, that would be a bit of a problem. Okay, so for those who have totally no experience in trading, then you have to start with basic trading skills and experience, right? Now, if you understand technical analysis and indicators, that will help, okay? Because a lot of this market timing, a lot of these strategies can use technical analysis and these indicators to, what do you call that, design a trading system or algo strategy, okay? So this would be an advantage to say that you cannot trade algo without this, but this is extremely helpful, okay? Because these are all numbers which you can crunch, you can try, you can backtest, okay? Some mathematical skills, yeah, yeah, if you know basic statistics and all that, will be very helpful as well, right? Now, the last part, this is a very important part, coding and programming skills. Okay, there'll be parts in the strategy, in the process, okay, the 6-step process, that you find that, hey, you may have to consider whether you want to acquire coding and programming skills. Okay, at least the basic programming and coding skills, okay, which can help you to actually code the rules that you have. Okay, later we'll see the 6 steps in the process. Okay, so this is something that coding and programming skills, like in language like Python or whatever platform language, you may have to seriously consider. Okay, and this is this particular skill, it's where a lot of people may get put off, okay, or may stop because they say, oh, I can't learn coding, I can't go on programming skills, okay. But this is a very, very valuable skills, okay. But we'll talk through it later and see whether there's some workarounds if you don't have this coding skill, okay. I, for one, quite lousy in coding and programming skills, okay. So I also have to seriously learn and put myself through learning some sort of a coding programming skills. Now, what code and what program you want to learn will depend on the output. Okay, so the output, the end game is very important as well. Okay, because if you program it on a certain language and you find that in the final implementation you are not able to implement or execute your algorithm or your system, or it becomes too expensive to execute it because of the technology required to take it live. Okay, so that is also a very important consideration. Okay, so this is something that I want you to consider very, very seriously in terms of coding and programming skills. Okay, because this may be the challenge that a lot of people cannot step across or cannot overcome. All right, so let's move on. Okay, so the 6 steps of building an algo trading from start to live execution. Okay, so these are the 6 steps. The first is self-evaluation. Okay, basically knowing your objectives, like what do you want to achieve, okay, in the end, okay, and your own suitability as well. So, okay, we will go through some questionnaires to find out what are the key questions you have to ask yourself, okay, because those key questions will determine when you design the algo for which market, okay, what types of risk management rules or position sizing you need to put in. Okay, then after you know your objectives and whether it's suitable, you say, okay, I know my objectives, I know what my end game is. Okay, then you go to trading strategy design. Okay, this is the exciting part, okay, where you turn your trading ideas into trading rules. Okay, so we'll go in and look at, in terms of trading strategy design, how can we go about that? Okay, how can we find ideas to turn into trading rules? Okay, so once you have that trading idea, okay, now this is a step that's very important. You have to code it, okay? You have to program it. You can make it into a strategy, into a rules, or into a language that the computer can understand, right? Because this coding part will have very important implications, okay? We have 2 implications. The first implication is how you can automate your backtesting. Okay, or how you can use computer to run tests for you. Okay, so it needs to understand the rules that you want to implement, and from there it will run a back testing for you. Okay, because if you get it into some sort of a code, okay, then you probably can't do computer back testing. Okay, you may have to do manual back testing. Okay, I'm not saying that manual back testing cannot be done. I've done it myself. Okay, many times over the years. Okay, even today I may do some manual back testing. Okay, but you cannot employ the true power of the computer to backtest if you don't have it in the code. Okay, so this step is very important. And after you have coded it into a rules, okay, that a computer can understand in the language of your choice, okay, then you do backtesting. Okay, so the backtesting part is the part which actually determines whether the strategy is profitable or not. Okay, and after that, if your strategy is profitable, then you want to employ it. Okay, then you have to ask yourself whether this strategy that you have designed, okay, and backtested, and you're very happy with it, whether this is do you need automation for that? Okay, if you need automation, then you have to go through the next step, which is connecting your strategy for execution in the live market. Okay, now this step is basically a technology step. Okay, so it's got nothing to do in the sense of your strategy design. Okay, but it's about how to connect. Okay, so this one you need to we'll see later, you really need to work together with your broker, because it's the broker that gives you the ability to connect. So the system that they have and what are the systems that they can provide for you to connect will have a very significant impact on what you can do in terms of your algo. All right. Then after that, of course, once you got your algo live, then you will be monitoring the performance. Okay, you will be seeing whether your algo is performing to the benchmarks that the back testing has shown. What numbers that the performance metrics that you've seen from the back test, is it performing to the standard? Okay, and whether the market conditions have changed where you need to review your strategy. Okay, so this last step is very important as well. So if things are looking good, well, let it chuck along. If not, then you may have to review and go back to step 2. Okay, step 2 again, or even step 1 to see whether this particular algo is meeting your objectives. Okay, if not, then you go through the whole chain of process again. All right, so these are the 6 steps to build your algo trading strategy. Okay, so we'll go in and talk a bit more about that. Okay, so the first step, self-evaluation. Okay, knowing your objectives and knowing your suitability. Now, in terms of going through this process, okay, you go through some self-assessment questionnaire. Okay, and there are quite a number of this self-evaluation or self-assessment tests online, even online. Some of them are personality tests. Okay, but in terms of looking at this, it's very important to ask yourself a few questions, even when you're trading any strategy. Okay, so even if you're not employing automating an algo strategy, when you start trading, okay, even as a beginner, when you first start trading, you need to ask these self-assessment questions. Okay, some of them may not be related to the algo, but it's related to strategy. Okay, so it's very important to ask yourself these questions. Let me show you some self-assessment questions that you may want to ask. Okay, you want to ask questions about why do you trade? What is your purpose and what is your motivation? Okay, are you trading for full-time living? Okay, hopefully you're successful enough that you'll be able to trade for a living. Okay, that's what I do these days. Okay, yeah, are you trading your retirement funds? Okay, this is also a checklist for myself. I retired from corporate life, so now I'm trading my retirement funds. Do you trade for thrills? Okay, if you check this box, then I guess the question is you have to seriously think. Okay, perhaps going through the process of designing an algo trading strategy will be helpful for you to basically focus on a methodology that actually has rules to follow instead of trading for thrills, right? So these are the questions, okay, for pastime or hobby. If you're trading for pastime, you're trading for hobby, the effort required to design or execute an algo strategy may not be for you, okay, because it requires work, definitely. Okay, so how much time to commit? Okay, do you have time to commit to creating this algo, building this algo strategy or not? Okay, okay, if you, of course, like me, you have all the time in the world, then full time, yes. Okay, do you want time for watching the screen? Now, if you employ an algo, which is what they call a signal generator, that means you're not automating it. Okay, do you have time to watch the screen for that signal? Okay, it may generate for you, but you may still need to watch for market conditions. You may not still need to watch for your algo, whether when you employ it, you need time to watch the screen. Okay, so if fully automate your system, of course, then you will reduce your screen time. Okay, your time for analysis. Do you have time to look at trading ideas? Okay, to scout trading ideas. Okay, because not every trading idea you design will actually work out in the end. Okay, the fact of a backtest is it tells you the true reality of the fantasies. A lot of us have fantasies as traders that this trading system is gonna make it, but in the end, when you backtest, then it shows you that it actually doesn't work. Okay, so backtest is a very, very good test of whether your trading ideas are fantasy or it's actually workable. Okay, we have sometimes a lot of this thing that we think that it works. Okay, we have a hunch it works, but when you backtest, then you know it doesn't. Okay, so do you have time for that? Because takes time to analyze trading systems and to test out trading system. Okay, so algo strategy creation requires your dedication. Okay, and also for strategy testing. Okay, trade management, of course, is for those if you're using the algo to generate signals. Okay, but you need time also to later you see to monitor your algo. Okay, you cannot then switch on and just walk off. Okay, you need to actually monitor your algo as well. Okay, so second page, let's see what other question. Okay, what sort of return expectations? Okay, this is important. Whether you're trading algo, you're trading a normal style. Okay, are you looking at conservative 10 to 15%, or you're looking for monthly returns of 10 to 15, or even 10 to 15 per month is not good enough for you? You're going for killing. Okay, obviously, this is something that you need to really look into it if you're trying to go for killing. Okay. Algo strategies may not be the type of strategy that you wish can give you a killing. Okay, so some of you may be thinking, why don't I go and buy a robot, go and buy an algo? All these developers produce all these algorithms which I can automatically plug and play, and then I'll be a millionaire. So honestly, there's no such thing in this world. Okay, if there is such a thing, that whoever has developed that algo will have kept it to themselves. Okay. Any algo that can really work is basically a trade secret. Okay, and you don't sell trade secrets for for $50 a piece or $100 a piece. Okay, you won't even sell your algo for maybe a few million. Maybe you sell an algo. Okay, but then if your algo is any good and it generates income, okay, you wouldn't be finding yourself selling the algo to another guy for $50 or selling to 100 people for $50. Okay, so those people who feel that you can go in, buy some robot trading strategy, and then you're set for life, I think you're set for a big disappointment. Okay, so if you're going for killing and you're thinking algo trading, algo strategies can go for killing, I'm sorry to disappoint you. It's a bit more work. It's a lot more work than that. Okay, risk and rewards as well. Okay, what types of risk or rewards? Okay, are you willing to take in terms of what sort of drawdowns? Okay, when you talk about risk rewards, is your system drawdowns. Okay, are you able to take a system with big drawdowns, or you prefer a more conservative method or methodology or algo strategy that has less drawdowns? Okay, how much capital as well is very important, as we've spoken just now. This risk capital will eventually decide what types of markets you trade. Okay, whether you trade a smaller contract or a larger contract. Okay, what types of drawdown you can take, what sort of risk and loss appetite can you take? These are important considerations. Okay, so in terms of back testing, you will see what type of risk this particular system will come up with. Okay, what types of drawdowns. Okay, so whether your capital can trade that side of system or not. Okay, and also the psychological comfort, right, in terms of the risk and risk or the loss appetite. Right, so these are important things when you consider evaluating your algo trading system. Okay, what skill and knowledge? Okay, so just now we saw some of the basic skills that you need. Okay, do you have trading skills? Do you have skills to design a methodology? Okay, what types of market analysis skills do you have? Okay, and lastly, and a very important thing, of course, the coding skills, which is a stumbling block for a lot of people. All right, and what are your trading beliefs and psychology? Okay, do you have risk tolerance? Are you a confident person? Okay, so these are, of course, things that are also valuable for, if not algo trading. All right, are you disciplined? Right, if you're not a disciplined person, maybe algo trading can help you out of that. Okay, are you an analytical person? Okay, which is important for you when you're designing algo. Okay, and do you have realistic expectation? This time we talk about, okay, how much time it takes to do an algo. Okay, so you may have to run through a lot of strategy before you can actually find a good one. Okay, I've gone through a lot of strategy, a lot of the things. Most of them don't work one. Okay, I must tell you this first. Okay, if you are able to find gems, then you go with it. Then you already, you hit the what do you call that? You hit the like a gold pot or something, right? So it's going through those as well, because backtesting is a very, very interesting aspect. Later we'll talk about backtesting. Okay, so realistic expectation on the time it takes. Okay, it probably takes you for a good algo to come out. Okay, maybe 1 or 2 years of work. Okay, but it's worth it, I must tell you. All right, so let's move on. So those are the self-assessment questions that you have to ask yourself, okay, before you jump into it, okay. As I said, it takes a lot of effort, okay. So we go to the next step. Okay, so when you say, okay, I sorted out what I want. Okay, so now we go into trading strategy design. Okay, how to turn your ideas into trading rules. Okay, so in terms of that, okay, in terms of the trading strategy design, basically your objective is to generate ideas and define it. Okay, so if you find an idea, you need to define it. Okay, so when you define, what does it mean? It's basically market selection. What markets are you going to trade? What time frames are you going to trade? Is this going to be a daily what they call that, overnight trade, or is a day trading strategy? Okay, do you have clear rules for entries and exit? Okay, you must be able to define what are the rules for entries and exits. Okay, rules for stop loss, rules for profit taking. Okay, and also your rules for position sizing. Okay, now the very interesting thing of going through this process when you're designing the algo design, okay, it will definitely improve, whether you're going to automate it at the end, it will definitely improve your trading methodology, because it forces you, because in terms of generating an algo trading strategy, if not clear, you cannot program a computer without knowing and defining all this. Okay, so it forces you to define your trading strategy, forces you to define your rules of exit. There's no ambiguity. Like, you cannot be ambiguous and say that agak-agak. You cannot agak-agak. It's not like it's not like cooking. Cooking, some people say agak-agak, put this, put that. You can't, in a program, you can't agak-agak. Okay, so you have to define it, all those things. Okay, when to enter, when to exit, what time to exit, how much to enter. Okay, all this has to be defined. All right. Okay. So a lot of work, right? Okay. Of course, all this has to be logical and rational, because your computer is a system that employs logic. Okay. Without it, it cannot execute your algo for you. Right. And one other thing, do understand that in terms of algo trading, if your system design is more simple, okay, the simpler algo will, okay, be more robust than a complex algo. Okay, basically an engine which is simpler will, compared to an engine which is very complicated. The complicated engine, okay, of course there will be bugs and all that. The complicated engine will tend to break down more. Okay, so a simpler strategy will work better in the long run and it'll be more robust. Okay, so keep it simple if it's possible. Okay, so let's look at the various different ways you can generate ideas. All right, so let's go in and look at the. Okay, so these are, of course, in terms of market analysis are plenty of different things. You can, of course, economic data is something that the algos you can do may not be accessible to you. Okay, but you may use even economic data to be your rules. Okay, candlesticks, patterns, Fibonacci, Elliott wave, Dow theory, all this, if you have the talent to program, it can be done. Okay, breakouts, pivot points, spreading, all this can be designed. Okay, so you need to find what's your favorite strategy. It may be a strategy currently you're trading already, okay, and maybe you feel that, hey, my strategy now, maybe I can employ it to multi-markets. Okay, so let's try that. Okay, but in terms of human being, I have limited time, I have limited energy. Okay, I can only probably trade one market or two. Okay, but if I put in an algo, perhaps using and testing it with other markets, I'll be able to employ my algo to other markets as well. All right, so looking at this whole what do you call that, a Pandora box of so many different types. Yes, find the favorite ones that you're using now, and you see how you can actually put it into or inject it into an algo strategy. All right. Okay, fundamental or technical analysis. Okay, so in terms of fundamental analysis, of course, you can put it into algo as well. Okay, but I don't know whether you will actually have a lot of advantage, because there are a lot of high-powered artificial intelligence looking at data and all that. You may not have an advantage, or you may not be fast enough. Okay, so if you're trading fundamental data or news, they're already very high-powered artificial intelligence algos running. You may not have an advantage. Okay, so maybe in terms of designing a algo, okay, in terms of technical analysis and indicator driven type of algo may be more suitable for individuals. Okay, right, because you may not have the advantage of that kind of data that all these huge funds have. Right, so in terms of competitiveness, and ability to execute the algo, perhaps in looking at technical analysis may be a better way of finding your strategy. Right, so let's go in and look at some simple algos that can be programmed. Okay, let's talk about things like moving average crossover. Okay, now this page you see basically a 12-period simple moving average. This is a monthly chart. Okay, and this in terms of this 12-period moving average has been what do you call that, employed for longer term trading. Okay, now this is interesting in terms of when we talk about algo trading. It doesn't necessarily has to be a very fast algo. It doesn't have to be an intraday algo. Your algo can actually be trading even things like a monthly chart. You may be taking a long-term view. Okay, so your algo, if it's a long-term, uses end-of-day data and all that, you may use that algo, but it may not be automated. Okay, so at the end of the day, when you run the algo, then you get a signal. Do you have a signal to buy or sell? None. Okay, then you wait for the next day. Okay, so algos can be like that as well, right? Algo can be a slow algo where you look at end-of-day data, you get the data, you put it into your strategy, and then the algo generates whether it has a signal or not. Okay, it can be like that. So it can be a thing like this 12-period moving average. Okay, which you can see all the buy and sell signals over here. Okay, so if market closes above this 12-period moving average, then your rule is to buy. Okay, so from here, looking at the chart, if you feel that a certain type of indicator and all that looks kind of looks great in the picture on paper, you can use that. Okay, use that and make this particular strategy into a rules. Okay, so once you have those rules, then you go to the next step. Okay, so this is one way to look for strategies. Okay, and as you can see, the what do you call that, the turtle trading strategy is actually something like that. Okay, if it breaks out of the 20-day high, then buy, and then if once you're in the position, if it moves below the 10-day low, you sell. Okay, so it can be as simple as that. Okay, incredibly, right? Don't think it's too rocket science. It's not actually. Okay, although the technology can be. Okay, or you can use other things like dual moving average crossover. Okay, so some of you may be familiar with this already. Basically, a dual MA crossover is a short-term MA crossover the long-term MA, right? So basically, popular combinations like the 5 and the 20-day or 5 to 20 period moving average. So the rules are what? The rules is if the short period moving average cross above the long moving average, then go long. Okay, and if the short period moving average cross below MA, go short. Okay, so these are the rules that will come out from your from that particular crossover strategy. You have to put it in that kind of logical rules. Okay, then later you have to convert into code. Okay, so let's move on and see what other things. Right, so this is a 5-20-day moving average crossover. Okay, so if you eyeball this particular strategy, and this is applied on the daily chart for the FCPO, okay, so if you eyeball this particular, if you're trading this particular system and you eyeball it and say, wow, okay, it looks like it performs rather well, right? Those crossover looks on paper, okay, on paper, it looks kind of promising, okay? So if you can design from there, these rules, just now we saw those rules above, okay, which is these rules, right? If short period, of course, it needs a bit more tweaking. You need to put a bit more rules, but basically the entry and exit rules are this basically, right? So this is it. So you eyeball this, and if it looks something promising, then you can put it into a rule, then you can code it, and then you can test it, right? So what other ideas you can get? Okay, so this is the 5-20-day MA crossover on FKLI, okay? So, of course, you eyeball it and you see whether this is something that looks workable or not. Okay, if it is, then you can also put into rules. Okay, so the thing about putting this into rules is you want to backtest. Okay, so backtest is where you get to see in the longer term, maybe a 5-year historical data, whether this strategy will actually work. Only look nice over this 1 year, right? Okay, so what are the things? Okay, triple moving average, okay? 4, 9, 18 moving average, one of the very, very popular moving averages used, okay? Because this 4, 9, 18 can have ability to spot a sideways market, okay? It can stop you from putting in a position during a sideways market, okay? So basically the rules about 4, 9, 18 is over here. Okay, I won't take too much reading this for you, but you can have a look at this. Okay, so if the 4 is above 18 moving average and the 9 moving average is above the 18, then go long. Okay, so these are the rules, right? So if it's this 4 below 18 and 9 above 18 is sideways, no trade. Okay, if 4 above 18 and 9 below 18, no trade because sideways. Okay, if 4 below 18 and 9 below 18, go short. Okay, so that's a short entry, right? And then if 4 below 9, close the 4 below 9, if you have a position, close the long position, take profit. And if 4 is above 9, if you have a short position, take profit, right? So these are the rules that you can actually program and code later. Right, so in terms of looking at, okay, so this is a graphical view of the 4, 9, 18, right? So trendy period, the sideways period, okay, just to give you an idea of what can be used for programming your algo. Okay, this is for the FCPO. Okay, so if you eyeball the strategy and it looks promising, then it's a matter of putting into a rules and then coding it in the next step. Okay, so Bill Williams indicator, right? So I've always used the Bill Williams indicator. You may want to go in and code it as well, right? So basically, if you can use the Bill Williams alligator crossover as your buy-sell signal, if prices trade above the 3 lines, the Williams alligator, then you go long. And if you say it touches closes below the green line, okay, then you take profit, okay. If it's in between the 3 lines, you don't do anything. Okay, very similar to the 4, 9, 18 crossover method. You could go in and program this as well. All right, so just some idea to give you what do you call that, a guide on how you can go about creating ideas. Right, so where are other ways to find trading ideas? Okay, of course, you can have your own inspired trading ideas, which you may be thinking for a long time but never tested it. Okay, you can, okay, maybe you're reading technical analysis or trading books and you find some good trading methodology, you feel you can program it. Okay, trading magazines like Futures and Commodities magazines, trading forums even. Okay, these are probably a great way to find trading ideas as well. Okay, so the key thing about trading ideas is if you find an idea that you can put into rules, then you can test whether that particular system or that particular trading idea is actually profitable, right, or tradable. Okay, a lot of them are not. Okay, so some trading ideas you think that are very good may not turn out to be performing well in a particular market. It may perform well in some markets, but not in this particular market. Right, so where are others? Okay, I want to talk to you about this interesting thing called the other sources. You can use strategy generators. Okay, if you go online, you will find this very interesting genre of machines or computer programs. Okay, which promises to be able to automatically generate strategies. Okay, and this I would say is a great way to research strategies as well. Okay, and all these strategy generators. Okay, you've seen some names here. I'm not endorsing these names. Okay, I'm not saying these are the, but I'm saying that as sources for generating strategies, these are good. Okay, and one of the names here is something I use as well to see how that works. Okay, and a lot of these strategies are basically quite well integrated in the sense that they not only develop strategies. Okay, and all these use things like machine learning, genetic programming, okay, quite high-tech stuff, interesting, okay. They are able to generate, using the data that you supply them, generate strategies, different type of strategies. You can use technical analysis, indicators, whatever. You can choose the criteria or parameters, and it can build a strategy for you, okay. Not only can it develop a strategy for you, it can also backtest, give you the result, okay. Output also the full source code, okay. If you have a particular source code of your favorite source code for your system that you may be using, okay, you can even output full source code that you can basically plug in and start trading that in various platforms. Okay, so this has very interesting, okay, for you. Of course, they are not cheap to try, okay. It costs at least 5,000 ringgit and above. I think some may be cheaper sometimes, okay, but it's something you can go in and try as well, because it's got some very powerful features. All right. Now, at this juncture, I want to talk about later when we go into coding, okay. Coding, you have to decide, you have to look from the back end what you're going to eventually implement, and then from there start working, okay. Because the language that you choose and the platform that you choose, okay, especially this source code, is very important, because you don't want to have a source code that you cannot implement at the end, okay, or the broker in your broker cannot help you to provide support for that, okay. Those are very, very important questions as well. Right, so these are some places that you can search for strategy as well. Okay, these are called strategy generators. Okay, quite controversial, but you can research. Okay. Okay, so let's move on to the next step. So now you have the rules. You have some logic to how you're going to go into the market, okay, and all that. What markets to trade and all that. Now you have to go to the next step, which is coding. Okay, so basically coding is basically programming the trading strategy rules, right? So in terms of coding, a few methods, okay. So this is where you may see your stumbling block. You need to know some coding, okay. Python or Python is one of the favorite for running algos. Okay, this is they say that Python. I haven't learned Python, but some of my colleagues have learned Python. It's not that difficult. Okay, you can take classes online, either Udemy or some of those free courses on Python. Okay, you can learn that. Okay, and you can use that for programming for coding. You can use things like Easy Language, which is Easy Language is a TradeStation, okay, which is a platform, or multi-chart. You can have that source code which can be plugged into TradeStation and multi-charts if you're using that type of platforms. That's why it's important at this juncture when you code. Eventually, you must see what's at the end. If you have a view of what is the end, then you from this step you can do it correctly, so that you don't have to go back and redo things, right? So if you're looking at Easy Language or even PineScript, some of you are using TradingView, okay? So PineScript, it looks, because I haven't tried it fully, right? It looks like it's quite easy to learn, okay? But of course, this is only exclusive to TradingView, so you can only backtest and execute that script if you're using PineScript, okay? So depending on the language and platform chosen, this may be actually your best option in terms of learning coding, okay? The other options like hiring a programmer to code, you've got the cash lah. Okay, if you have the cash, you can hire, okay, or maybe you outsource it to some programmer in India, or they may be able to do it at more affordable prices, okay? But it can be expensive, okay? And of course, you may stand the risk of your strategy confidentiality, okay? So if you have a very good strategy and this guy programs it and find, wow, this is also good, okay? You may lose confidentiality of your strategy, okay? So it looks like in terms of coding, your best option is you must find a what do you call that, a language that you're comfortable to code, or okay, if you take the route you saw just now in the strategy generator, that strategy generator can actually produce the source code for you. Okay, so these are decisions you have to make when you are employing your coding. All right. So after you have coded it, okay, now that's ready to be employed, okay, into whatever backtesting software that can read your code, okay? So the backtesting is one of the very important part of this process, okay, of strategy generation, and also to see whether this thing can work or not. You don't be, employing a strategy that doesn't work even on historical data, okay? So when it comes to backtesting, okay, so basically to validate the trading strategy, okay, look at the performance. How is this strategy that you're using in terms of the market you're trading, okay, in terms of the historical data you put in for it to churn, what is the result after going through all those trading rules, okay? So you will have at the end a report, okay? Hopefully your system is good enough. You will produce a report, okay? And in that report, you have these things called performance metrics, okay? So you have things like P&L, the calculation for profit factor, Sharpe ratio, maximum drawdown, risk of ruin, return drawdown ratio, equity curve slope. All these are very important things. Later we'll just go through and see what are the very vital and critical measures of a good system. Okay, now when you consider this, okay, that you need to gen this, okay, then you will have to see, okay, in terms of your backtesting, what you need to use for backtesting. Okay, so for backtesting, of course, the old and tried and tested method is manual testing. Very, very slow and tedious. Okay, and actually, when I want to test a person, a lot of times, a lot of people come and say, "Hey, David, teach me how to trade." Okay, yes, I can teach you how to trade. Are you serious about trading or not? Okay, so if they say, "Oh, I'm serious, I'm very interested," the first thing I do is I'll give them a system to backtest. Okay, most of them fail. Okay, they won't do the work. Okay, so because I have so many systems, I want people to backtest. So I say, okay, I give you this system, you backtest on this data. Okay. A lot of people will fail. A lot of people will not put the effort. Okay, so trading actually takes a lot of effort. Okay, so I test people by giving them doing backtest. Okay, manual backtest. Okay, a lot of people fail. I only seen only 2 persons do it. Okay, okay, one is my own spouse. Okay, she managed to do it for 2.5 years, and now she's assisting me in trading. Okay. They say very difficult to teach your spouse to drive. Don't try, but right, some spouses are good when they come to trading because they like it. Okay, so she passed the manual testing. So manual testing, why? It's very slow, it's very tedious. Okay, and sometimes it's subject to hindsight because you know your data, and sometimes you know why the market is moving on because you own the data. So it may be subject to this hindsight bias and all that. Okay, so manual test, a lot of people have been employing it for years and years, okay, before the advent of powerful computers, okay. But now with powerful computers, you may not need to manual backtest, okay, because manual backtest, then your ability to generate a lot of ideas and be able to test a lot of ideas is limited. All right, so DIY backtesting program. Okay, can you program your own? Can, if you're good. Okay, you can use Excel. You can use your Python programming knowledge to do DIY backtesting program. Okay, but as you see just now, you have to gen all those metrics. It's quite a task. Okay, time consuming as well. Requires programming knowledge. Okay, third-party tester also can hire a trusted. Okay, that's why this word trusted programmer or tester. Okay, but it could be expensive. Okay, and it's not practical to test many strategies. Okay, perhaps the best option, okay, I would say is the retail trading software. Okay, so these are widely available, okay, at reasonable cost. It's not free, okay, widely reasonable cost, okay, and ultimately, because when you're using this retail trading software, it'll be actually quite integrated in terms of strategy creation, the language to use, and then the backtesting, and then ultimately the execution and implementation of it into the live markets. Okay, so these types of retail trading software, okay, you have the ability, we'll talk about some of them later when it comes to putting those orders. Okay, they are able to perform a lot of things. They can back test, forward test, paper trade, live trading. Of course, that means you have already employed the algo into the system. Okay, it does the broker integration. I mean, it talks to your broker systems. Okay, it gives you charting, and it's got market data feed. Okay, basically in terms of retail trading software these days is very, very powerful. Okay, it's multifunctional. So in terms of looking, as I said, looking at the end result, and then moving back to all your processes, using a retail trading software may be one of the better options, okay, in terms of the work required. All right, so these are the few methods for backtesting. Okay, so once you have put it into your machine to backtest, okay, whether any of these methods that you're using, okay, you must know how to read the results. Okay, so what results are we looking at? Okay, let's have a look. Okay, performance metrics. Okay, what is the measure of good trading system? Okay, so there are, of course, a few of these which I just currently show you and flash in front of you. All right. So things like total net profit, of course, your system must make a profit. Right? So all those that make losses, you can basically ignore. Okay. So basically, the calculation of gross profit, you have to have total net profit. Okay, profitable system or not. Okay. Then what is the profit factor? Okay, which is basically gross profit divided by gross loss. Okay. So this measure is a quite important measure. People look at it and say, okay, above 1 in terms of profit factor, okay, acceptable. Above 2, wow, this is considered good. So if you have a system that gens out a profit factor, a backtest of more than 2, wow, okay, you can be excited because this is considered good. Okay, percentage profitable, this is a lot of people, when they sell system, they try to sell you this particular metric, which is its percentage win. Okay, of course, the higher percentage be better. Okay, although good systems may have less than 50% winners. Okay, so looking at even the turtle trading system, okay, it's in the long term, the statistics is probably less than 40% of it is winning trades. Okay, so it depends on what sort of trades is it. Is it a trend following system, or is it a counter trend trading system? Okay, percentage profitable trading can sometimes be deceptive. Okay, because there are other considerations that are also important. Okay, even the better systems can have less than 50% winners. Right. The other thing is, what's your average trade net profit? That means all the trades, all the profits, net profit divided by the number of trades. So every trade, what is your expectation of the profit? Okay, if it's negative, then forget it. Okay, the system may not work. Right. So if it's a positive figure, how much? Right. Worst case drawdown. Okay, this is a system that means that if the system make a loss, okay, what is the largest loss before it comes back up and goes to a new high in terms of the profit? Okay, this is very important. Win-loss ratio, okay, which is the average profit over average loss. Okay, you divide the total profit divided by the number of profitable trade and divide the gross loss divided by the average and get the average loss. If it's above 2, that means risk-reward ratio, and say, okay, 2 to 1. For every $1 you lost, you make 2. Okay, so that is considered ideal. It's considered good. Okay, however, also this particular win percentage need to be considered when you look at win-loss ratio. Okay, equity curve slope. Okay, this ideally in a good system, it has to be a 45-degree. Later I'll show you. All right, Sharpe ratio is a very highly used measure. Okay, higher values are better, of course, and more than one's considered good. Sortino ratio is again another measure that tries to measure performance against risk. Okay, higher values are better. Above 1 is acceptable. Above 2 are considered ideal. Risk of ruin is a measure whether your particular system will totally lose all its money. Okay, account depletion. Can it lose all its money? Right. Of course, smaller is better. Of course, ruin is defined. If it's 100%, that means you're sure to lose all your money. You don't have that system. You want to have a system that has a very low risk of ruin. Okay, less than 10% is considered acceptable. The lower it is, the better. Right. So in terms of, these are the key metrics. You can see that a lot of that is involved in terms of backtesting. All right. Let me show you some results of backtesting using a genetic programming strategy generator. Okay, so this is a generic, this is a genetic programming strategy generator, and this is one of the results it gave me. Okay, trading on intraday data from from April 2020 to April 2021. All right, this system looks very promising. In fact, in terms of the measurements, if you look at profit factor, is 3, right? That means its gross profit is 259, its gross loss is 82. So this profit is very good. Okay, it also divides its report between long and shorts. Okay, so I won't run through every single thing, but I'll show you what is available. You can gen a lot of data for you. Okay, return on starting equity. Okay, this system started with 100,000, so the return for that 1 year is 176%. Okay, percentage profitable is 32%. So you can see, even a system with such nice metrics, the percentage win is only 32.59%. So that's an interesting thing that is revealed by this type of backtest. Right? I'll give you a second page. Okay, so it gens all this data as well. So here, what's the average trade expectation? So for every trade you expect about a return of 103. Okay, this is on one contract basis, trading palm oil one contract basis. Okay, there's no position sizing here. Okay, it measures a lot. You see a lot of metrics over here, right? So these are the types of reports that backtest will come out. Okay, win-loss ratio 6.4. Oh, very good at this one. Okay, if you risk $1, you have a profit of $6 averagely, right? Return to drawdown ratio is 90, which is very powerful compared to the drawdown. Sharp ratio 2.4 is super excellent. Sortino ratio, this one also above the roof. So I haven't really deployed. I'm trying to find trouble with this. Okay, because it's too good. I'm trying to find trouble with this, right? So okay, so a lot of things, risk of ruin is zero. That's so in terms of this particular gen backtest, this system has zero risk of losing all its money, right? There's all the other measurements as well. You can see event top, hour multiples, and all that. Okay, so I won't go through all this, but this just give you a feel of what backtest results look like. Okay. Worst case drawdown is very important. So the worst case drawdown for this system is 3,000, which is very respectable. Then on top of that, the return base divided by the drawdown, you get 5,000%. Worst case drawdown, how many percent? Okay. So a lot of data you can gen. Okay. So some of you may be eyeballing this data and say, wow, this is good, right? So this looks like holy grail results. Is it too good to be true? Okay. So that's the question. Okay. Or could this strategy be over-optimized? What is over-optimization? When it comes to backtest, it's very important to know this. Over-optimize. Basically, what over-optimization we'll cover in the next slide. Okay, I want to talk about that. Okay, but before that, let's talk about the equity curve. What's the perfect equity curve? This is the perfect equity curve. Okay, 45 degrees. Okay, it's actually 45 degrees. It's just that I have to elongate this chart to fit into this picture. It's actually 45 degrees. Okay, which is basically saying that, wow, this system is super. If you can get a backtest with this kind of what do you call it, 45-degree system, wow, this wonderful result. Okay, so I have to pinch myself. I have to go in and debug. I have to go in to find fault with it. Where is the problem? Okay, because I've traded some of the systems live, which was generated by this strategy generator. Okay, some assumptions that they make are not correct. So when you do tests, also you have to run it through some live or paper trading to make sure that this actually is working according to the rules. All right, so this is the 45-degree, the ideal equity curve for your system. All right, so let's move on. Okay, optimization. Okay, basically optimization, because the power of algo is you can change your inputs, or you can tweak your inputs very fast, right? Okay, just now we saw the 20-day crossover. You can pick, or you can do 621, and you can tweak and tweak and tweak to find basically the perfect system for that particular data. So that's a danger. Okay, you can over optimize. Okay, that's a pitfall. Okay, common pitfall among people who start with doing algo and backtest is over optimize or curve fitting. Basically fitting the system to the data. Okay, so you can create many magical system or perform almost perfect on past data, but can it work on future data? Okay, so that's a big question. Okay, because market conditions may not repeat itself. Okay, so basically you're just churning to find what's the best curve fit. Okay, so the solution on this as well is things like walk forward testing. Basically, you test with the data you didn't design the system on. Okay, that means you use what we call out sample data, the OS. Okay, basically in sample data is a data you use for designing the system. Then after you design the system, you get the metrics, you backtest that, and then you apply that system with out of sample data to see whether it's consistent in terms of the performance metrics and the performance against the in sample data. Okay, so that's sometimes you can do that manually. Sometimes you can do that in paper trading, okay, or in the non-live trading. Some people, even the expensive way is, of course, to do it live with real money. Okay, you basically outsample data is data that the system have not seen in terms of designing the system. Okay, so interestingly, okay, I just want to move back to that chart. This test actually has out data test as well. The green part is out sample testing. Okay, so the blue part is the data that is used for designing the algo. okay, then the gray part is used for testing, and the validation, the green part, is out of sample. Okay, so I'm still trying to find fault with this system. It just looks too perfect for me. All right. So be aware, okay, over optimization is one of the key things you must avoid when you're backtesting. Okay, so we've covered backtesting. Okay, then we now decide, okay, you decide, hey, this is good enough. I'm very excited. Now I want to connect for order execution. How do I do this? Okay, so this is an option. Whether your particular strategy needs automation. Okay, some system that you generate, it could be a signal generator algo, so you don't need to automate. But if you need to order execution, okay, if your system, the one you design is it needs fast execution, okay, or it cannot be humanly monitored, then you need to go to this step, automation, basically connecting for order execution. Okay, so a few options here. As I said just now, this is the end part, and your end part you have to consider while doing your coding part. Okay, so the question is automated algo trading. Do you need it? Do you need to automate your algo? Okay, so as I said, if your algo strategy is just to generate signals end of a day or session, okay, maybe half session or opening session or closing session, you may not need to automate your order execution. Okay, so that's one thing that a lot of people may get put off, is they feel that they need to automate everything. Not necessary. Okay, so depending your algo strategy style, you can even manually place your order. As I said, manually place through the online trading, so it generates for you. You order, key into your order, even you can call your broker to execute your trades. Okay, or you can automate it. Okay, you use an automated order execution through an OMS. Okay, you need to work with your broker. Okay, because you need to interface with your broker in this step. Okay, this is a technology step. Okay, so the challenge is technology, right? Not so much of your strategy, but technology. Okay, so in terms of automating, okay, so of course there are advantages. Okay, it's like this multi-handed octopus here. Reduce screen time for the trader. Okay, you can trade around the clock. You can trade multi-markets. You don't really need to monitor, because the algo will execute for you because you have execution. Okay, the good thing, of course, it minimizes emotion. Some people, the algo give it the signal, but then it's still frozen, cannot key in or cannot call the broker. Okay, so problem also. So this minimizes the emotions and preserves discipline. Okay, and of course improves the speed of execution once the trading conditions are triggered. Okay, so there are really advantages of automating. If you can, that'll be wonderful, right? So, but it requires you to interface with your broker system. Okay, it's a technology hurdle. Right. So in terms of automated trading, once you have your algo that's generating the trading signal, then this trading signal needs to go into a trading application. So this can be a retail platform. It can be, or even what you call an API, where you interface with your broker system. Okay, that's where your broker comes in. You need to talk to your broker and see what systems they have to support your algo trading. Okay, and then the market goes into the exchange for live execution. Right. So connecting to your broker, of course, there are various trading platforms already provided by the Malaysian brokers. Okay, check out with them whether these platforms that they use can interface you, or they have other gateways as well. Okay, now these are the external trading platforms that I'm talking about, things like Trading Technologies, okay, TT, okay, some brokers in Malaysia are supporting that, CQG, Ninja Trader, multi-charts. Okay, all this require a broker gateway. Okay, by itself, it cannot talk to the exchange. Okay, it needs to have a gateway that's supported by your broker. Okay, of course, all these platforms already can talk to those gateways. Okay, it has it can interpret and have the messaging that can talk to the broker gateway. Okay, because the broker gateway is the one that connects you to the exchange. Okay, so you need this particular interface before you can do it. Okay, or if you have you did the fanciful way, you did the fancy programming, and now it's not on any of these external or retail trading platforms, then you can even apply that particular programming into what we call an API into the gateway. Okay, so this is a more how should I say that, a complex way to connect. Okay, so some of you may find an easier way using already existing trading platforms that can make it easier for them to talk to your broker. Okay, so this is something that you need to talk to your broker and discuss with your broker what sort of support systems they have for algo trading, right? So after that, the last step is tracking. Wow, okay, I've taken so much time, 9:56, the time flies. Okay, tracking, okay, and I see a lot of questions coming in. Okay, so tracking, of course, monitor performance review system, okay. Algo, once it's automated, it's not set and forget. You cannot just put there and then go for holiday and come back, you think you make money. So continual monitoring is required, okay, because you need to see whether your algo system is performing as programmed, okay. So some of the considerations is once you go automated, you may want to use, say, for example, you use a retail trading platform, you might want to use the VPS, okay. You cannot, you may not be advised to use your PC or at home, okay, because your PC may have downtime, your internet may be down, your electricity may be down, okay. You may need to use VPS in to manage your downtime. Okay, so of course, the last part is system review to see whether your changing market conditions can require the review of your algo strategy. Right, so those covered the 6 steps. Okay, hopefully, of course, we don't have really much time to go very in depth into each and every one of them, but I've hopefully given you a good enough idea of those 6 steps in terms of going from strategy to what. Okay, so yes, last part. Okay, 3 critical things to know. One thing is every trader needs an algo strategy. Okay, if you're not trading a methodical or systematic way, try to put it into an algo strategy. Okay, the algo strategy is only as good as the trader. Okay, if your knowledge is not so good, pick up your knowledge about trading. Okay, because that garbage in, garbage out. Okay, you put garbage in, you gen garbage out. Okay, and simple strategies work best. Okay, so these are the 3 takeaways from our session tonight. We will go into Q&A. Back to you. Okay, additional resources. Okay, last part, Shane, just hold on. Reading materials. If you want to go and explore, these are good books to explore. Okay, books by Kevin Davey, Ernest Chan, and Rishi Narang. These are good books to get started. Okay, I highly recommend this book for you to check out further on algo trading. Okay, so back to Shane on Q&A.
All right, so I think just take a bit of time to do a few Q&A, then we shall conclude the session today.
Yes,
so thank you everybody until staying until now. Okay, the first question is, what are counter trend strategies? Are you able to talk about that?
Okay, counter trend strategies, I think in normal trading, basically you're trading against the trend. You're trading reversals, okay? So you're picking tops and picking bottoms, okay? That's what it means. So maybe the trend is uptrend, okay? But you're taking trades which are either short-term going on a correction, okay? Or you're seeing maybe a swing turn, you're feeling that market's gonna turn from there. So you're basically trading against a trend. So picking tops and picking bottoms, okay? It could be part of the strategy in a range market as well, where you're basically trading the tops and bottoms of the range. Hope that answers the question.
All right. The next question is by Muhammad Shamin. What do you mean by the number 5? Why traders lose money is starting off undercapitalized. So what do you mean by that?
Okay, so when you start undercapitalized, that means you're basically trading. Let's say, for example, okay, every trade, one of the rules is maybe trade less than 2% of your risk. Okay, so let's say you have 10,000. Okay, you have 10,000. So per trade, you don't want to lose more than 2% of that. Okay, so 10,000. Okay, is you don't want to lose more than 200. Okay, so if you are trading, let's say for example, 10,000 ringgit, you're trading a less. You may trade maybe. Now margins are quite high, okay, in terms of palm oil, okay, but basically over trading in terms of the exposure, okay, so undercapitalized for the risk that you're taking, okay, so basically when you undercapitalize, when you see drawdowns, okay, because systems go up and it goes down, your equity balance goes down, you become a point that if you don't have enough capital, you'll be out of the game. That means you cannot trade anymore because you have losses have come, maybe a string of losses come that your particular capital cannot even trade one single lot of a futures contract. Okay, so that's undercapitalization. So you need enough capital to be able to take the drawdowns that will come in any system, right? So that is what it meant by undercapitalized.
All right. So let's do one last question is, can you show us how do we do manual backtesting?
Okay, so manual backtesting is basically taking, okay, I would, last time I used to do it on Excel. Okay, so all those rules that I have, I will have those logical expressions on Excel, and I will put all the open, high, low, close data into that Excel, and then I will check through. It will come out, of course, the results. Okay, so basically, you can use the Excel to backtest the system, so long as you put those conditions in your Excel. Okay, so if this crosses this and all that, using the data that you have. So, okay, you download a set of data, maybe 5 years of data. Okay, high, low, open, high, low, close volume, and then you input it into an Excel spreadsheet, and then it comes out the output. Okay, then so you see the results. Okay, then of course you need to debug your system whether any errors or not. Okay, so I do manual backtest by doing that. Okay, of course some of them are, you can, if you don't use Excel, then you have to use pen and paper. That's even more tedious. Okay, so I think minimum standard, you must use some Excel spreadsheets to do your backtesting. Just manual backtesting.
All right. Thank you so much, David. I think let's do one last quick one. Do you know any broker in Malaysia that support Ninja Trader?
Plenty. You do have to ask. Okay, of course I can't promote specifically promote a particular broker over here, but do check around. Yes, they Ninja Trader. With in my experience, we have onboarded. That's a clue. We've onboarded people using Ninja. Okay, Ninja, multi-charts, all that can be onboarded. Okay.
Yeah, I think today we have learned a great deal about algorithmic trading, and I think I particularly love your 6 steps method to how to set up our algorithmic strategies, and you explain each step very well. So I think this is the takeaway that we all get today. So thank you so much, David.
Thank you.
Okay, let me pull out my screen to tell you how you can, earn some pocket money, from this webinar. So not only is this webinar made free for you, but we also give away some of the prizes for our webinar attendees. So if you answer our survey questionnaires afterwards, we will pick 10 lucky respondents who answer our survey questionnaire and give you Touch and Go e-wallet reload pin worth 30 ringgit. Okay, we just want more of you to give us feedback on, how do you find the session and where else you can improve and what topics you want to hear from us. So the survey will be launched after this webinar and will also be sent to you via email. So we will reach out to the lucky winners within 2 weeks to give you the 30 ringgit Touch and Go e-wallet pins. I believe, for the past 6 sessions we've done, I think many of you here have already gotten the 30 ringgit. Okay. So yes, do fill up the survey questionnaire so we know how whether this topic meets expectation and what else we can improve. All right, so we'll pick 10 lucky respondents. So for our next webinar, it is titled "How to Trade BMD's First Exchange Listed Inter-Commodities Futures Spread." All right, so this product is yet to be launched and will be launched soon. So when it's launched, then we will share with you how you can trade this inter-commodity future spread between FCPO and FEPO. Okay, FCPO and FIPO. Okay, this inter-commodity spread is happening on 27 October 2022. Is a Tuesday, 8:30 to 10 p.m. So let me give you the registration link. So here is the registration link where you can sign up for our next BMD webinar, okay, to learn about how do we trade this FIPO and FCPO in the commodity spread. All right, so that is the end of my slide. So thank you everybody for staying until the end of this webinar. And remember to fill out our questionnaire to let us know, how else, what is the feedback of this session and how else we can improve. And thank you, David, for spending your time with us this evening to share with us, how do we set up our algorithmic strategies to up our trading game. Thank you. Thank you, everybody.
Thank you. And goodbye, everybody.
Yeah.